Welcome back to America's Commercial Real Estate Show. I am Michael Bull. This segment is brought to you by GetValuate.com, online investment analysis. Do check them out. Today we're talking about crowdfunding for commercial real estate, and what an important topic. The crowdfunding in the commercial real estate world has really grown. And there's new players and there's some old players, if you call them old, in the new world of crowdfunding. And one of the new players has a great lineage, a great background behind them, and I want to introduce them to you. Please welcome my guest, Adam Kaufman. Adam is Managing Director and co-founder with ArborCrowd, and he's joining us on Skype. Adam, thanks for being with us.
Michael, thank you for having me.
So Adam, I think one of the first things that a lot of our clients think about when they think about crowdfunding as a source for debt or equity, they think about, well, why? Why should I consider crowdfunding as a sponsor for my next project?
You know, from the sponsor's point of view, people always need capital. They need capital to close on transactions and participate in greater or even more transactions. So a lot of our sponsors that we have through the network of the Arbor family of companies with Arbor Realty Trust there, we speak with our sponsors and we know, lots of times their family and friends network that they alternately raise capital from gets tapped out. With the passage of the Jobs Act in 2012, there came a whole new class of this retail investor, and that gives opportunity for sponsors to tap into a retail investor base around the country to invest and raise money from, to invest in the deals, but more importantly, to access crowdfunding platforms like ArborCrowd, who do that fundraising for them and pass it on to the deal with directly. The crowdfunding investor typically comes in at a lower clip, at a lower dollar amount, and it takes just as much work to do the investor relations side of that, to manage those investors. So you have retail investors on our platform, we take $25,000 minimums. It's important for the sponsors to know that they don't have to manage those relationships. We do it for them. And it's just as time consuming. Sponsors typically go to family and friends for $250,000 minimums, $500,000 minimums. We get a whole bunch of crowd investors at $25,000 minimums. We manage those relationships and we close on the transaction on day one, and then fill it with the crowd.
Okay, so if I'm a developer and I am buying a project, and maybe it's an existing project, and I want to pull in a couple $1 million in crowdfunding as equity, what is my process with you guys?
So that, first and foremost, it's very important to know which site you're going to, which crowd platform you're going to. What we do is we look at the deal and we underwrite the transaction and do our due diligence on the transaction. But when we get to closing, we fund the money right on day one in a JV structure that we then go towards the crowd and backfill the money. So the onus is on us to do the raise, but the transaction is still happening no matter what, if we fail to raise that money or if we do, because we front it.
I see. So that really makes it simple for the sponsor. I'm bringing you the project. We're talking about your equity investment, what kind of return you're looking for, and then we do it or not, and then you're handling the crowd.
Exactly.
Okay.
Exactly.
Well, that makes it sound a lot easier. So what are the benefits, though, of coming to a crowdfund process like this over more traditional methods of maybe mezz financing or something else?
So, like I said, it really depends on the platform, but because we can close up front, we offer the crowd investors to come in at really on a passive non-interfering level. So you're basically getting a check up front. There's very few limitations on how you can do your job and manage the property, perform any of the upgrades or whatever the strategy may be, with little interference and not having to manage the relationships of each individual investor.
Okay, and give me a typical deal that you guys have closed or you're working on now. Then show me how that would work.
So we primarily focus in the multifamily space. A lot of the investors, it's easier for them to understand, workforce housing, multifamily, feel safe and secure. As we know, the stock market's going up and down and there's a lot of volatility there. So to get the retail investor who may not have experience in real estate, they can understand more tangibly understand the benefits of workforce housing and how stable that might be
Sure.
within the real estate arena. So we focus on that sector, and what we like to do is present the crowd investors on an IRR basis in the mid-teens. Obviously, if it's a New York City type of asset, we would focus between 12 and 15%, but we do an IRR mid-teens, and that's net of fees on our platform. So we charge fees to our investors basically to participate in the transaction. So, you'd come to us, we'd underwrite the deal, we'd look at it from the different lenses and the experience that we have within the Arbor family of companies. Sometimes we're even doing the financing on the deal through Arbor Realty Trust, right? It may be a bridge product of ours. So we're looking at it from all angles, and that not only gives comfort to the sponsor as a one-stop shop, but also to the investor who has the ability to say, okay, to some degree, the debt and equity is aligned, the interests are aligned here.
So give me a picture of it. So I'm buying a $10 million apartment community. What might I get as my underlying first mortgage, and tell me about the crowdfunding piece and what LTV, what a typical rate might be right now.
So without going too much into the debt side, because I let my sister companies deal with that. Well, basically they come to us for a loan. They'd look primarily at either we're a large agency lender, Fannie and Freddie. And similarly, we have a bridge product that we put on our balance sheets. They go and work with that side of the house, facilitating the financing. And then if they need equity, they come to us. We would write between a $2 and $6 million check with them. We guarantee that they have their own equity in the deal to some degree as well, up to 30%. We like a base of 30% pretty much. And therefore, we can sell it to our investors as, hey, all the interests are aligned because the sponsor has equity on the line. The crowd has equity on the line, and also the financing is in-house at Arbor Realty Trust.
Okay, so if the sponsor is putting 30% in the deal, is it really, can't they pretty much get 70% financing at some pretty good rates? Why bring in the crowdfunding piece?
Well, that goes back to what we addressed in the first question is, when you're in real estate, you want to keep buying. It's almost like an addiction, right? So you're going to run out of money and run out of sources of capital. And if you don't have to manage that relationship for the next transaction or to participate in a larger transaction, that's where ArborCrowd comes in. And that's where a lot of our sponsors that we've worked with for 15 years on Arbor Realty Trust, 20 years, right, now can come to Arbor and the Arbor family of companies and say, oh, wow, there's an alternate source of non-interfering passive equity that they're offering me, and that's through the crowd vehicle.
Okay, and if you're not driving around in your car, if you're stationary somewhere while you're listening to us, you can go to ArborCrowd.com and check out some of this. So let's look at it, Adam, from the investor side of the table. So you said the minimum investment for an investor is $25,000. They are passive investors. So how long might they be in the deal, and what are some tips for the investor? So
I'll start with the first tips for the investor. Who you're doing business with matters so much in any way. So when you go to a crowd platform, there are so many out there that started as technology companies that think that they've hired real estate experts, can source the transaction and the investors at the same time, and you're relying on their underwriting skills and their experience to basically start relationships on both sides. Knowing who you do business with is very, very important, and trust and transparency. ArborCrowd, the model that we've based off is we pick single properties from sponsors that we have long-time relationships with through the Arbor family of companies, going 20 years back. We look at their track records and present that to the crowd. We put together offering overviews of 30 pages long, really looking at the facts that we looked at to underwrite the deal. And we present that to the investor, and we are here to answer all the questions along the way, because obviously real estate is a new investment type to our investors. But ultimately what it comes down to is what's the background, what's the experience of the sponsor, and what's the transparency that's being presented to you to really understand the investment that you're making. And are they closing on the deal on day one? What is the risk of my investment actually going through? So knowing what people are doing with that experience is very important when investors choosing a platform.
Yeah.
Now, when it comes to the different, when they're analyzing a deal and saying, it really comes down to what's the right deal for you as an investor, right? Some deals, we apply a value add strategy, let's say. on a certain transaction. We explain that to the retail investor, what that means, what the unit upgrades are going to look like, where the market can support that, and how we do our looking at the transaction. We present that to the investors, but you have to know, am I comfortable with a 2 to 5 year hold, let's say, with no cash flow, or would I like a little bit of cash flow and I'd want to participate in a different transaction that has a quicker turnaround, maybe 2-3 years down the line with a different strategy. And that's why we present the sponsors that we're working with, the detail in the background and the strategies that they've done in the past, so that investor can make that decision based on, that type of investment that they want to make.
Yeah, that is so well said and so important. You've got to know who you're dealing with. And I like your lineage here with Arbor Realty Trust. You guys know real estate, and also like the fact that you guys are investing in it in the beginning. You like the deal yourself.
Right, and that's important, because if we don't, we put our money on the line. So if we don't do the raise, if the raise is unsuccessful, which thank God we have not had that issue, our money's in the deal.
Yeah.
Now, oftentimes private equity shop does cut into the equity stack as well.
Yeah. Now, how can listeners and viewers of the show learn about this more? Can they go to your website and get invited to take part in some of your webinars?
Absolutely. So we put a lot of effort into the education process, and we've cultivated a community of educated and learning investors. So if you go to our website, ArborCrowd.com, and you register to create an account, you get access to abundance of information from articles written on basically explaining the different terminology, all the way to how that impacts your tax returns. And then you get live webinars where you'll hear us and part of our team explaining to you different concepts, explaining to you the deal. We even get the sponsors. We require the sponsors to do webinars when we launch the deal to explain what their thoughts were on the transaction compared to all the other transactions that they're doing currently or have done in the past, realized and unrealized. And the investor gets that personal experience, and then they get even live Q&A aspects where they can really come in. No question is too stupid. No question is too basic. That's what we're here to do, create that community to educate people to make the right investment decisions for themselves.
I don't know. You say no question is too stupid. I haven't been on the webinar yet. I might ask one. That is so important. So do you have to sign up for these webinars and this information, do you have to be accredited?
So anybody can sign up to access the information. To make an investment, you have to be accredited. So if you're just wanting to learn about real estate or different real estate investments, and maybe in a few years want to get into it, or maybe talk to your spouse about it, your mom, your dad, your kids, definitely sign up, because we have so many tools there to really teach and educate people. Yeah, and Adam, great information. Thanks for joining us. Appreciate you being on the show. Thank you for having me. It was a pleasure. Yeah, and do learn more. Their website is ArborCrowd.com, and even if you're just going there to learn, set up for the webinars and learn more about their projects, it's a very interesting company, great lineage. And stay with us. After a short break, we're going to have an attorney on that has written a couple books, and he has very detailed knowledge on crowdfunding. So whether you're an investor or a sponsor, you don't want to miss it. Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show.